Welcome. Today we'll be going over the standard leave reports. These reports are the leave liability and provision report, the leave movement report, and the leave category balances. The leave liability report is generally used to obtain the value of the leave at a specific point in time, normally at the end of a pay period. The leave movement report is used to obtain all of the transactions that have happened for an individual for a specific pay period. So we can see on this report an opening balance, the accrual, in other words, how many days he's got this period, any balance adjustments that may have happened, as well as any paid or unpaid leave that he has taken, and then a closing balance. This report is also sometimes run with a cost at the end. The annual leave category balances category breakdown report gives us the balances of the individual's leave in the different category breakdowns. Starting with the accrual, this tells us how many days per cycle they will accrue. The normal column gives us the normal leave that they may accrue. This is the leave that is not including any long service accruals. The additional accrual column gives us the additional accrual that the person may have, so anything that they have for long service or that is in excess or in more than their normal accrual. At the end of a normal leave cycle, normally on the engagement date anniversary, the normal leave will move to the carry forward column and the additional will move to the carry forward additional column. This means that in your normal and additional columns, you should only ever see 1 year of data at the most. If you're seeing anything else there, a negative or a value that is higher, this would indicate that either the individual has allocated their leave incorrectly, not from a number of days perspective, but from which balance it needs to come out of. And sometimes this happens with the ESS when the individual types in a number of days in, let's say, the additional column instead of allowing the system to do the allocation itself. Or alternatively, there's been some sort of balance adjustment. In other words, somebody has cancelled leave, or there is some other transaction that is not handled normally by the system and doesn't normally follow the rules of the deduction across these fields. We then reach a lump sum column. Lump sum is used when there is an additional amount of leave to be granted to an employee, but doesn't fall into any of the the previous categories. Excess is the next, and excess is the leave that is at this point in time in danger of being forfeited. The total leave column. This column is the total of the previous columns, so it's very straightforward, it's just the total leave. And then we have a forfeited column. Now, forfeited is just a record keeping area. This leave is no longer available to the employee to take.